Have you ever paused to think when you last withdrew cash from an ATM? When was the last time you actually stood in a bank queue? And how many times this week have you paid with just a tap on your phone? From buying groceries to booking flights, money now moves at the speed of the internet, silently, instantly, and globally. Most people think fintech innovations are a recent, high-tech invention meant only for programmers and startups. But the truth is, they were created to solve a very practical problem. Traditional finance was slow, expensive, and inaccessible to millions of people. To see this clearly, imagine something simple. You scan a QR code and pay for a coffee in seconds. Without realizing it, that single action already follows the core logic of fintech, using technology to move money faster, cheaper, and with fewer intermediaries. This is the Learning Studio, where we break down accounting and finance by connecting real life to real concepts. What's actually happening in that moment is straightforward. Technology is replacing paperwork, physical cash, and manual verification with digital systems that operate in real time. That idea, improving financial services through software, data, and networks, is exactly what fintech means when explained formally. The same logic now operates on a massive global scale. Digital payment platforms allow people to send money across borders instantly. Mobile wallets replace physical cash. Online platforms offer credit, insurance, and investments without traditional bank branches. Companies like PayPal and Apple Pay didn't change money itself. They changed how easily people can use it. As finance became digital, a new question emerged. How do we trust records when there's no central authority watching over them? That question led to blockchain. Instead of one institution controlling data, blockchain spreads records across networks, making them extremely difficult to alter. This technology now supports digital assets, supply chains, identity systems, and secure financial reporting. Built on blockchain are cryptocurrencies, digital assets that allow peer-to-peer transactions without banks. They're volatile and risky, but they introduced a powerful idea. Value can move globally without centralized control. From this idea came decentralized finance, or DeFi, where borrowing, lending, trading, and interest payments are handled by code instead of institutions. It's finance without counters, contracts without clerks, and systems that run continuously without human approval. This transformation wasn't shaped by one individual. It emerged through decades of advances in computing, cryptography, and financial systems, and is now guided and monitored by global institutions such as the Bank for International Settlements, which studies how digital finance affects stability, risk, and regulation worldwide. Their work helps ensure innovation doesn't outrun safety. Fintech matters because it changes who gets access to money. Farmers receive payments directly. Small businesses get digital credit. Workers send remittances instantly. Investors trade from anywhere. Finance becomes less about location and more about connection. Now that you understand the intuition behind fintech innovations, digital payments, blockchain, and decentralized finance, the next natural step is to explore cybersecurity, digital fraud, and controls in financial systems, where we'll see how this fast-moving digital world is protected from misuse and collapse. Stay curious, stay innovative, and continue the journey with the Learning Studio, shaping future finance leaders.